So let's talk a little bit about the Japanese yen and the broader Japanese markets. We have seen a lot of optimism over Japanese assets, but at the same time, perhaps a little bit more caution because of what the weakness in the Japanese yen could signify in terms of where the economy is going.
Well, the currency is really kind of different animal, so I can't comment a lot more. But it is really true. Japanese society is now changing, driven mainly by the generational change from the older generation, from the now generation. It's the older generation. They had a huge success experience in after World War II, so couldn't really change the way they were doing when they started seeing some problems. But our generation never saw the success experience of of Japan, so we are more open-minded. So that is the kind of main driver of Japanese society or economy is now changing. So compared to that, the weaker yen is just a one kind of temporal move. It's a function of the interest rates and others. So I'm not so worried about it.
But others might argue that it's also to do with a function of where inflation could go from here. And really, there's a whole generation that's never seen inflation and price pressures. Being in Japan, I hear from a lot of people that companies don't know how to raise wages or how to raise prices for consumers as well. Do you think it'll take more time for people to adjust to actual sustainable inflation?
No, but the last 2 years, Japanese companies did raise wages, 2 years in a row, like 4%, 5%. And also they started raising prices like 2 years ago. So it's, and people get accustomed to things very quickly. So just up until like 2 years ago, yes, Japanese management couldn't really raise wages prices, but now people feel more comfortable doing it. So it's really changing.
We're just talking to Palliser Capital, and James Smith was telling us about the change in that mentality, especially when it comes to improving corporate governance. Will that be sustainable enough to really boost assets further when we have seen already a rally in Japanese stocks?
Well, if you think about Japan, you know, if it's how to allocate the human resource, or how to allocate the production factors, how to allocate capital, all of those three things, Japan's been really, really bad. You know that, right? There is an age, seniority system and everything. So we didn't really allocate those resources, but yet Japan's been producing like world number 3 or number 4 of GDP, which is amazing. It's like running with the iron shoes, but still
managing to get somewhere.
To get number 3, right? So if we start changing those resource allocation, we can do much better. So that kind of thing is now happening in Japan. So it's not very visible because it's happening all over the place. But it's very irreversible, strong change happening. So I am very optimistic, constructive to Japan.
Making strides despite wearing iron shoes. I really like that analogy. In terms of some of the things that can change and have been changing, investor attitudes, attitudes of corporate boardrooms, for example, do you think these things have been improving to a level where that is helping Japan's competitiveness more globally?
Well, it's not to the perfect level yet, but it is for sure changing. You know, the accumulation of the corporate governance reforms in Japan, accumulation of the ISS or the grassroots of those people kind of coming up with new, stricter standards, and also the TSE and the activists and everybody, you know, kind of providing more pressure to the Japanese corporate management. So accumulation of all of those are now making them change. And I think, as I said, the biggest issue is not only all those outside pressures, inside the corporates, the managements are my generation or younger who are more open-minded to the global standards or best practices of the world because we didn't see the huge success of Japan in Showa. So we are more open-minded. So that is, I think, a big factor.
We've heard from some corporate leaders, including Morgan Stanley's Asia CEO, saying that they could actually see Japan catching up to the likes of Hong Kong and Singapore in terms of being a global financial hub. Do you think this is a realistic goal for Tokyo?
Well, you know what? Japan, as you know, the beautiful place, safe, clean, kids can walk around at night. So there are many reasons for people to come. But for those, for Tokyo to become the hub of the asset management business, I do strongly believe that we do need to change the tax treatment for individual people. At the end of the day, this asset management business or financial business, a people business, we do need to be able to get the high-paid, strong boss to reside in Tokyo. So we have to think about how. Currently the tax is too high for them being in Tokyo, being in Japan. So we should change that. But as long as we change that, I think we can be way much better off than Hong Kong or Singapore. I don't hear anything.
Well, let me take it from here then, because we are trying to figure out the labor cash earnings numbers coming out, and I think Heidi and I were just looking at it. And you can see that year-on-year has been growth of 2.1% for the month of April, and it's really beating expectations. As you said, we are seeing that wage growth come through. And as we're getting those numbers, we're also seeing the yen edging lower, given that the numbers really surprised to the upside. But despite the fact that we are seeing these changes in Japan, it seems that when it comes to Japanese investors, they're still sending their money overseas. Are you going to see a change in that sort of trend with more domestic investors being more confident about the Japanese markets as well?
That is really a good point. With that NISA, that new Nippon Investment Saving, program, whatever. As you know, the many money went to abroad. Okay. Ironically, last year the best performing asset of the world was the Japan equity, even in a dollar term. This year, in a local currency term, still Japan is the best performer. In a dollar term, no, because of the weaker yen, but still in a good performing. So it takes a little bit of time for people to realize, because people behave based upon the experience in the past. So we did see that the Japanese equity didn't do well, so that we kind of programmed to invest abroad. But now 2 years in a row, Japanese equity doing good. So that will start making an impact to the people's mindset. So I believe sooner rather than later, Japanese investors' money will more put into Japanese equity, I think.